Hey everybody, Rob Maurer here, and today we're going to be talking a little bit more about what's going on with Tesla's deliveries, demand, China, the reaction in the stock market today. It's been an emotional day, I think, for a lot of people. I feel like I just want to have some light jazz music on in the background of today's episode or something, but hopefully we can all settle in here a bit, set those emotions aside, do some analysis, figure out where things go from here. Alright, so Tesla stock finishing today down 8.6% to close at $242.40, while the Nasdaq was up 2.3% on the day today. Not sure where we'd be if that had not been the case. Probably would have been a much worse day for Tesla, but already we're seeing a 10% spread there between Tesla and the broader index. I think it's pretty clear that this is primarily a reaction to the Q3 delivery report. Of course, we had AI Day as well. I think that's mostly a non-factor, maybe just some selling off of the news, since there wasn't really anything there that would surprise the market in a short-term way. I think a lot more conversation that we'll have about that in future episodes, but because of the strong reaction in the market today and just a lot of the conversations that I've been seeing, I want to spend most of our time today on that and some of the other important news items from over the weekend. Alright, so the down 8.6% today for Tesla, that is the worst day for Tesla in 4 months, since June 3rd. I had to actually look back and see what happened that day. Shows that things like this can be pretty easily forgotten, but back on June 3rd, that was back when we heard about Tesla announcing layoffs. The stock fell to $243, 10%, basically identical to today, and for some of the same concerns, right? Just about demand and macroeconomy and where Tesla fits into that over the short to medium term. And just for some interesting context on that, the stock did continue to drop thereafter, but it did kind of level out by the time earnings came around. About 6 weeks later, popped 10% on that earnings report, and then it hit the highest price of the second half of this year within a month after that earnings report. So in this case, I'm glad that we have earnings a little bit closer in, just over 2 weeks from now. I think it's a good opportunity for Tesla to show truly how strong their financials are. I still expect a really good report, and gives them an opportunity to comment and have a discussion about some of these things that might be causing concerns, and maybe ease some of those. Maybe it goes the other direction, who knows, but Tesla's business is a very strong business, and the earnings report is a good reminder of that. Alright, so let's talk about this delivery report and some of the reactions today. After the initial reaction video yesterday, I tweeted a thread expressing why there's likely to be some demand concerns here. We'll talk more about that in a second, because I think, as I alluded to yesterday, that's really what's driving the stock today. And I've also seen a lot of common questions or rebuttals to those ideas, and I want to share my thoughts on those things as well. First though, before we even get into that, I want to start off with the reality as I see it, because oftentimes I just skip right into the market's perception. People kind of misinterpret that as my own assessment when I'm really just assessing the perception in the market. So I want to be super clear, start off with my own assessment. My message would be, don't panic. Tesla is a fantastic company making fantastic products. I've said it 1,000 times. This quarter does nothing to change my opinion on this. Production is what matters. Tesla will figure out how to sell these cars. They're going to make tons of money on those sales. From time to time, yes, there are going to be these little supply and demand pockets for all of these little dumb reasons, like price change rumors, refresh rumors, incentive deadlines moving around, imperfect allocation forecasts, localized production ramps happening at different speeds. Like Shanghai right now is way ahead of everything else, so there's just more cars in China, and that leaves Tesla with the problem of figuring out where those cars should ideally be at which points in time. They have to manage pricing around that, oftentimes months in advance because of that order backlog. They have to navigate shipping to many, many different countries. The list goes on and on and on. There are so many factors influencing these things, and yet we sit here and we just expect Tesla every quarter after quarter to navigate it all perfectly, because most of the time, to be honest, they get pretty darn close to doing that. And whenever they don't, oh no, the sky is falling. There have been so many quarters like this. If you look back in Tesla's history where something has gone just a little bit differently than expected, you can see examples with Model S and Model X as Tesla approached that refresh and worked through it. You can see examples of the Model 3 when Tesla first started shipping to Europe. We've had Tesla introduce the standard range Model 3 kind of out of the blue, and that caused demand concerns. Tesla closing all of their stores. Like, there have been so many times where Tesla has dealt with these things where the reaction is just like, is this really the end of the road for Tesla? And it's never the end of the road. It's not going to be the end of the road because of what Tesla is building, which is, again, fantastic products that Tesla can build at prices that nobody else can build them at, with perhaps the most talented group of people in the world striving hard every single day to make that process even better, even more cost efficient, products that are even better, even more reliable, and even more technologically advanced. This is what Tesla is doing day by day by day that they're going to keep doing for the next decade. That's the reason to be invested in Tesla, not, oh no, there was a little bit of a demand hiccup in China because there's some weirdness with incentives and there's this rumor of a price drop. Tesla will figure it out. There's so much room left to grow. We don't need to worry too much about where Tesla's margins are right now or next year because Tesla is, 5 to 10% into what they aspire to be, even just from a scale perspective on manufacturing vehicles. And that part of their business, which they're 5 to 10% of the way in on, that represents less than half of what Tesla eventually aspires to be. From there, you've got Tesla Energy, you've got FSD, you've got hopefully eventually the Tesla Bot. If any of those things hit, or if Tesla's automotive business can just even grow as they expect it to grow without including any of those things, then Tesla is going to be a great investment. I have full confidence in Tesla's management team to navigate however they need to navigate through this ever-changing net of circumstances and deliver these best products at the best prices with the best margins at the best growth rate for many years to come. Like I said yesterday, historically, such times of demand concern have been great investment opportunities. All these things that we just talked about, those are the reasons why that's been the case. I'm as confident as ever in Tesla's ability to continue to drive down their cost of production, continue to leverage technology. Those things are going to overwhelm any of these short-sighted demand concerns. People right now are really not fully appreciating the impact that Giga Berlin and Giga Texas are going to have on logistics once those are ramped up. That's going to be huge for costs. Tesla can bank that, or they can just use it to lower prices, access a bigger market. Tesla, even in a macro environment of uncertainty, is in a very enviable position. So again, don't panic. All right, now that I've shared my thoughts, hopefully made my opinion very clear, I do also want to talk about the market's reaction, the perception that we're seeing right now in the wake of this Q3 delivery report. So I've mentioned a few times demand concerns. When I brought this up on Twitter yesterday, a very common question or rebuttal to that was, how could there be demand concerns? Tesla says very clearly in the report that all of these cars have been ordered and will be delivered to customers upon their arrival at the destination. Elon has said on Twitter they're unwinding the wave. He said at the start of this year to expect this, so what's the problem? There shouldn't be any demand concerns. It's very clear that Tesla sold these cars. The debate around this topic to me has been a little bit disappointing, and unfortunately, those occasions are becoming more and more frequent, I think. In this case, I say that because I think that a large portion of people, I'm not talking to everyone here, so please don't take this personally, but I think a large portion of people have approached this debate from Tesla's side with the point of view that if anyone has demand concerns, they're dumb, they didn't read the report. Tesla says right there that they've sold all these cars, and by the way, look at X country. It says it's going to take 3 months or 6 months to get a Model 3 or Model Y or whatever. For these reasons, you must be an idiot to have any concern about demand. This is the type of tone that I've seen a lot of that side of the debate take. This to me is unfortunate because I feel like in this circumstance, there are reasonable questions to be asked here, and analysis like I just talked about is a little bit too simplistic. Okay, great. Yes, Tesla did sell those cars, but what about this upcoming quarter? What about the next quarter when Tesla is continuing to ramp production extremely quickly? At this point, it should be very clear that the order backlog in China has declined over the last 3 months. Okay, so Tesla can go and then ship those cars elsewhere, and that's fine. But the concern comes from a forward-looking perspective, saying that, okay, those other markets, those have been supply constrained for a long time. Now Shanghai can export more vehicles than ever. In Q3, that probably ends up being like 3.5 times the number of vehicles that they exported in Q2, plus probably an even greater forecast for Q4. What does that do to the backlog estimates or the wait time estimates in those other countries this quarter? And is that impact going to be just like what we saw happen in China in Q3? That is just not an unreasonable question to be asking. And that really just moves us into Q4, and from there, production is just going to keep ramping up. I mean, we need Tesla to 2x, to 3x. What does that look like? We don't even know Tesla's next platform. We just have heard robotaxi. So are they just going to keep dropping prices for Model 3 and Model Y? It would seem like maybe they're going to have to if those backlogs are already drawing down. What does that mean for revenue, for margins next year, and beyond that? If it weren't for the electric vehicle tax credit in the United States coming back, those questions would be ringing even louder. Now, my answer to that is all the things that I talked about in the first 5 minutes of this episode, and that's why I started with those things. I do think that eventually, yes, Tesla will lower prices. I just think that Tesla is going to keep driving down the cost of production curve further than what most people are expecting. In my model, I've already been modeling for average selling prices to decline, so I'm not worried about that. But the point is that these are good questions to be asking. These are the things that we should be thinking about as investors. It's definitely not dumb to ask these questions, and even having a different opinion, I can understand that. There is a certain amount of uncertainty here. I believe in Tesla's track record and what they can still accomplish, but certainly not going to fault someone if they have a different point of view. Well, to an extent. I guess I can fault some people if they are, a little bit further down on that bearish extreme, but asking questions about this or having discussions on this doesn't put somebody in that category. And if we as a community attack or discourage those type of discussions, I think that leads us down not the best path. So that's why it can be a little bit disappointing and, public service announcement, I guess, for how we engage in these topics. And I totally get it because we've just been bombarded by years of just negativity and FUD and bad actors and all these things. So it's easy to just kind of come at those things from an attacking perspective because that's how it's been for so long. It has been such a battleground. So I do understand that it's a fine line between engaging and over-accommodating, but I just kind of want to keep that top of mind. Anyway, I don't expect that to be a super popular opinion, but back to the demand stuff. I hope that walking through that helps with understanding why those questions are popping up, and it's not because people didn't read the report. At the same time, I would reiterate all those things I said in the first 5 minutes. Don't panic. I think there's a lot of good things that Tesla is doing that are not fully recognized or appreciated. We've been in situations like this before where, again, some questions were valid, but Tesla has always stepped up and answered those more than thoroughly. Another thing from yesterday that I do want to clarify, and then we do still have quite a few other topics to go through here, but yesterday I talked about how Tesla now had about 40,000 vehicles in inventory. I've seen some people confused about that since Tesla outproduced deliveries this quarter by 22,000 vehicles. So people wondering, why did I say 40,000? That's just me adding in Tesla's pre-existing inventory. That's always non-zero. We find that number in Tesla's quarterly report. We can see that in Q2, they stated that they ended with 4 days of supply. They say at the bottom how to calculate that. They're using an industry standard calculation, which they explain at the bottom. It's just the quarterly deliveries divided by 75, under the assumption that that is the number of working days for the quarter. Tesla may vary from that, but again, industry standard calculation. So using that for Q2, 1 day of supply for Tesla would have been 3,400 vehicles. 4 days of supply then about 13,500. Then we add the just over 22,000 vehicles that Tesla produced in Q3 but did not deliver to that number. Yes, that still counts as inventory even though they have orders. So that number increases to about 36,000 vehicles. I was rounding up to 40,000 just going off of memory yesterday. So that's the number I was using. And like I mentioned, this is barely over a week of supply now for Tesla. If we use the same calculation for Q3, Tesla will report 8 days of inventory on the Q3 earnings report. And if we look back to last year, Q2 had 9, Q3 had 6 last year. So this is not some ridiculous amount of inventory that Tesla's got. It's actually extremely, extremely low even still. Just a little bit less insanely low than it's been for the last couple of quarters. All right, let's move on a little bit here. We do have some news updates on China, so we've talked a bit about it, but want to make sure that these are clear as well. There's been reports out of China that Tesla has apparently commented and denied rumors that Tesla would be lowering the price of the Model Y. I'm not sure how official this comment was. It may have just been from an employee saying, oh yeah, I don't know anything about that yet. So we'll take it for what it's worth now, but we are 3-4 days into the quarter at this point in China and still haven't seen a price cut. That's probably a positive sign for demand. We've also had the news that we talked about before about Tesla offering 3 times pay to work through the Chinese holiday. So also probably a sign that Tesla is trying to maximize production and not too worried about demand. Now, I still wouldn't be surprised if we do see a price cut. We'll see later in the quarter. Kind of on the other side of the end, we've got wait times. Tesla has updated the wait times, but they've now moved to 4 to 8 weeks for all products except for the rear-wheel drive Model Y, which does actually still sit at 1 to 4 weeks, even though we've now moved into traditionally what would be an exporting month for Tesla. However, if Tesla is truly finally unwinding the delivery wave, that could explain this as well. Normally, we'd just be expecting Tesla to be exporting for a month here and not delivering any cars, so they'd have at least a 4 to 8 week wait. But if Tesla is exporting and doing domestic deliveries through each month through the entire quarter, then that process shift is going to result in different wait times here in the early parts of it. So we'll keep an eye on that. I think it's too early to really champion, oh, they moved wait times back to 4 to 8 weeks. Well, not for probably the highest volume variant, but on the other end, if Tesla truly is done with this delivery wave, which I remain a little bit skeptical of, but if they are, then a consistent 1 to 4 week estimate on there would mean that Tesla's pretty well matched in terms of the supply in that market to demand. The other quick thing out of China this weekend, Ray for Tesla sharing a rumor that CATL has received an order request from Tesla China to make a longer wheelbase configuration for the Model Y in China. Many companies have those variants specifically in China as those longer wheelbases are more popular. A lot of people have drivers in those more premium segments. So we've actually heard rumors about this for the Model 3 for a long time. Those have yet to come to fruition. I'm pretty skeptical on this too. And the more reports like this that we get, the more I think you have to question, where are these reports coming from? Maybe a Tesla competitor that's trying to get people to delay purchases of the Model Y or something like that. Definitely could be wrong, but this just seems like a lot of extra work and production complexity for Tesla to add and really just seems a bit contradictory to Tesla's whole ethos. All right, next up, I want to talk about an interesting report from Reuters over the weekend. They claim to have seen Tesla's production plans for the Model 3 and Model Y for the next 4 quarters, which they claim to have confirmed with 2 internal sources. Reuters doesn't give us exact numbers for each of these quarters, but I measured this out by pixel in Excel to get as precise a numbers as I could. They're saying that for Q4, Tesla is planning 495,000 vehicles produced for Model 3 and Y, up to 503,000 in Q1, 537,000 in Q2, 552,000 Q3 2023. I know there's been some discussion on this already. I think Dave had talked to Tesla IR, and his takeaway from that was that this was more likely accurate than not. One of his reasons for that was the Q4 number. He mentioned that Tesla IR in the conversation couldn't confirm or deny anything, but mentioned, hey, 50% annual growth. At that time, Q3 expectations were somewhere around 360,000, so that would leave 475,000 deliveries to get to 50% annual growth for Q4. So I think Dave was thinking that's pretty close to what we're seeing here. From my point of view, not really all that close, because I don't know if Dave was thinking about the Model S and X on top of this. That's going to push this up to 515,000 plus. This is just 3 and Y. So those aren't really all that close where it'd be a target just to try to get to 50%. This is also talking about production, which where we're at right now with what we know with Q3 production, Tesla would need 465,000 vehicles produced to get to 50% growth in production year over year. That'd be 10% less than this alleged target. And now that we know Q3 deliveries, they'd need like 496,000 deliveries. But again, that would include S and X. So depending on how you talk about it, they're kind of close-ish, but not enough to make me feel like, oh yeah, that's definitely where Tesla's targeting just to hit that number. That doesn't really validate it for me. Let's go to the next layer of analysis then. If we look at where Tesla's production rate was this quarter, and we assume that Shanghai didn't have the downtime early in the quarter like it did, Model 3 and Y production rates were basically 410,000 units or so. We've got 120,000 roughly out of Fremont, 265,000, again, excluding that downtime out of Shanghai, and about 25,000 between the combination of Berlin and Texas. Remember, we're just talking Model 3 and Model Y here. If we move forward into Q4, remember, Reuters had previously said, hey, Tesla's going to do 20,500 a week. So basically the number I've got in here. Then for Fremont, we'll just assume that's steady state. The rest of the growth then would have to come out of Berlin and Texas, putting Berlin and Texas at 110,000 units combined in Q4. That's pretty insane. That would be an additional 85,000 vehicles out of those two factories from Q3's level, and an average production rate in each factory across the entire quarter of about 4,200 vehicles per week. We know Tesla is around 2,000 per week at Berlin, maybe a little bit lower in Texas. So to average that over the entire quarter, Tesla would have to ramp up to 5,000 per week at both factories in just the next couple of weeks, when we know they're really not targeting that until the end of the quarter. So that doesn't really make sense. And then if we look further out, Q1, Q2, and Q3 next year, after somehow adding 85,000 vehicles of production in Q4, Tesla only adds 8,000, 34,000, 15,000 in those subsequent quarters, a total of 57,000 vehicles worth of capacity in 9 months when they just added 85,000 in 3 months. That doesn't really make a lot of sense to me, even if you factor in downtime, even if you factor in, hitting the top of an S curve. This just isn't making much sense to me. If we look at the number of vehicles added per month in terms of the production capacity, Q3 each month would have added about 5,000 to capacity. Q4, this would expect 28,000 vehicles per month added in capacity. And then the next 9 months, only 6,000 per month. That's weirdly volatile, weirdly unambitious throughout the entirety of 2023. Tesla, remember, these are supposed to be targets, plans. Tesla is usually a little bit more ambitious than that, I think. So Q4 seems unrealistically high. Q1 may be explained by some downtime, but then Q2 and Q3 seem unrealistically low in terms of the progress. So this breakdown where we have the growth coming from Berlin and Texas doesn't really make sense. You might say, oh, well, maybe Fremont and Shanghai, maybe those grow and that makes it look more reasonable for Texas and Berlin. But in those cases, I'm also finding it difficult to find a scenario that makes sense. There's still probably too big of a jump for Berlin and Texas in Q4 based on Tesla's own communication that we know. Then there's still very little progress in the ramp for Berlin and Texas because, you can't take those units that we added to Fremont and Shanghai away. And now those are falling below 5,000 per week at each factory. In 2023, we already know Tesla's targeting 5,000 per week at the end of this year. And then when we come to the last quarter, Q3 2023, Berlin and Texas both still come out between 4,000 to 5,000 per week, when we know Elon Musk has said that for Berlin and Austin, they're looking for 10,000 cars per week by the end of next year. So for them to be planning on only being at 4,500 per week in both factories in Q3 next year, no, doesn't make any sense. I'm not finding a scenario where this checks out. Now, where did Reuters get this from? I have no idea. It makes me hesitant to even disagree with it because, again, such a weird thing to make up. But I just don't see it making sense unless there are multiple hidden pockets of downtime in here for upgrades or something like that, that Tesla is kind of rotating around these different factories in these different quarters. Even under that scenario, though, I find the Q4 target hard to believe. So we'll see, but those are my thoughts on that. Couple of other quick things here. So Tesla did tweet out this weekend that Berlin has hit a production rate of 2,000 vehicles over the course of a week. I mentioned that in the analysis that we just talked about, but really great to see them hit that milestone. And then Tobias Lind on Twitter also noticed that there's been some activity he has not seen before in the cell production facility at Berlin, maybe indicating that Tesla is ramping up some of those operations there. Next, we've got a report on Giga Nevada. Electrek is saying that they have learned that Tesla is finally expanding the factory's footprint with the building extension. Quote, according to sources familiar with the matter, Tesla plans to start building at Gigafactory Nevada again, starting with an expansion of the C section of the building, end quote. It looks like this would be an expansion for cell production, but aside from that, unfortunately, we don't really get any more information on what this might mean. Still, that is exciting to see. We haven't seen Giga Nevada built out to its full original plans yet, and it's been a long time since we've had any expansion there, so nice to see some attention refocused on that factory. Next, not a lot of reporting on this. I think it's just a headline coming from Bloomberg Terminal, but some tweets today from Zero Hedge, Investing.com also sharing it as well. I haven't been able to find the article, but it reads that Tesla and Google said to be exploring potential partnership, according to a source familiar with the matter. Without more information, don't want to speculate too much on that. Maybe it's Tesla Bot, maybe it's Dojo, maybe something with navigation or FSD or any number of other things, maybe none of those things at all. Could speculate a ton on that, but long episode, want to get this out, so we'll spare that. And then the last thing today, obviously Elon has been active on Twitter today. A lot of takes on Ukraine and Russia. Not really anything that I think is worth getting into here. Obviously, it comes with the territory with Elon. My thought is that actions speak louder than words or tweets. Elon's gonna do things and say things that not everybody agrees with from time to time. That's probably the case for all of us, and I think Elon's got a highly net positive track record of actions, but that's up to each individual to assess. So anyway, to wrap up the episode, I would just reiterate what I started off with. Don't panic. I think Tesla's in a great position. We're in a time in the market where fear is widespread, especially around demand concerns. Interest rates rise, demand isn't there like Tesla hopes. That's a scary situation for a growth company. I don't think that's the situation that Tesla ends up in, but that's the kind of thing that investors are laser focused on to try to avoid in a relatively scared environment like we're in right now. Any hints of that, justified or unjustified, it's going to cause a reaction. So creates opportunities. I know we've had plenty of opportunities, but look back at Tesla. Flat from 2013 to 2019. Sometimes the opportunities last a lot longer than what you would hope, especially if you're leveraged at all. But being right and persisting in being right long enough is one of very few paths to a difficult achievement, which is outperforming the market. All right, long one. That's where we'll leave it for today. I'm sure we'll have plenty of comments that misinterpreted or didn't listen to half the stuff I said, but trying to articulate some things that just aren't really binary in nature in a way that makes sense, and hopefully it did, but I have given it my best shot. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Tuesday, October 4th episode of Tesla Daily. Thank you.